there we are. But what's good with y'all, boys and gals? Today's video, as you can see by the title already, but I just want to go over confluences and stuff like that. And for this example, usually I use Euro USD, but like I told y'all in the previous videos, I'm about to start trading the S&P 500 and NASDAQ. I don't think I've taken a trade in, it's been like a week and a half, 2 weeks now. But I've just been having a lot going on, and I've just been studying the markets, you know what I'm saying? Seeing how price works with my strategy, you know what I'm saying? And so far, it's so good. Even like right now, I'm looking at a good trade for our New York session. Like I said, we had price come down, sweep out these lows. And this was during pre-market, so New York session hasn't officially opened just yet. It opened right here. So this would technically be considered a continuation trade, but it's a continuation coming off of a liquidity sweep. And we got our reversal confluences right here. We inverse the fair value gap. Also at the same time creating a fair value gap. I think there's actually a term for that, but I'm not entirely sure. Feel me? But anyways, New York session finally opened, and we got legs down into this fair value gap, thus confirming our you know what I'm saying, reversal point from these lows down here, right? So I would have entered off of this rejection of this last candlestick. Scale down to the 1 minute time frame, probably would have found a faster entry, and I would have been targeting London session highs. So that would have been a W day. London session would still be considered a continuation trade, but there wasn't no real liquidity sweep. But I guess there was a move up and a move down right here. Feel me? And like I say, liquidity is just highs and lows, key levels in the market that make more sense for price to come up, sweep those levels, and then continue or reverse from that point. Because like I told y'all, we are small fry in this game of trading. We don't move the markets. So the people that do move the markets, they would obviously want to either buy or sell price at a better price, you know what I'm saying, or at a better level so they can get a bigger return. So it makes sense for us to come up and sweep session highs or session lows to feel more volume in the market for us to get a real move, and B, just to add more liquidity in the market. Liquidity is just extra money. Feel me? That's basically it. It's that in simple language. And then fair value gaps, again, are imbalances. An imbalance in price action. Like this leg down right here was a lot of imbalanced price. These two big candlesticks, that's where the gap comes in at. There's nothing there. It's just one huge down candle. Right? Those are imbalances. The sellers were selling too fast for buyers to counteract. And you seen what happened after we came down to a key level, a key low. We immediately shot back up, doing the same thing that we did to get down to these lows. We did that going right back up. I'm the person that targets these moves going right back up or right back down. Just like this scenario right here. There wasn't no real fair value gaps, but it's still a lot of volume shooting to the upside. Right? We came up off of these highs and shot right back down. That's also a break of structure. Like I said, a break of structure. A move up and a move down. The last low point we had was technically right here. But on a 1 minute time frame, you could have found one a lot sooner than that. But even here, at the trade that I took, well, I wouldn't have taken it here, but There's a breaker structure after this liquidity sweep. Move down, move up. Feel me? Came up, swept out this high because technically speaking, there was no down candlesticks from there. So this will be the last lower low. And this will be the last lower high because it's the last up candle. And we broke above that. The New York session open. Got some manipulations to the downside. Filling this fair value gap. Filling the imbalance in price. And continuing on. It doesn't get no simpler than that. Like any low points, session highs, like equal highs like this, a low high like that, like a lower low like that, that's just sitting there out in the open chilling. That's a clear like draw liquidity or take profit point. See how you can use these highs and lows for anything? Like this could be a take profit point. You feel me? Let's say the price came up. Like me personally, if I'm watching the start of London session and I see we just created this reversal up, I'm not gonna be looking for a continuation. If I'm being honest, I'd be looking for a sweep of these Asian session highs to come back down and target this low. Obviously, I would have lost, but that's just how I trade. I trade reversals from session highs and session lows. Data highs, data lows, and just regular lows like this. Like, when you've been trading for so long, it's just everything that I choose to do has a high conviction. Like, okay, I can see price coming up, taking out these highs, and then coming back down to these lows. And if I can see the other side happening where we don't come back down to these lows and just continue on with the continuation. But me personally, I'm going to look at that and be like, well, which one makes more sense to me? And that's obviously what I'm going to go with. But trading in itself is simple. Like, again, highs and lows are everywhere. And I don't just necessarily use the 5-minute time frame. Like I've been telling y'all, the higher the time frame, the better. That's what these numbers are up here. Like I was just on a 5-minute time frame, and you've seen how many liquidity sweeps happened. But the 1 minute, no, I said the 1 minute. The 1 hour time frames hold much more power. Literally, look, that same low that I marked out on a 5-minute time frame is a 1 hour draw on liquidity. It's a low point. And we swept it on the hourly time frame. Then moved up from there. Like, I don't know what more you need. Like, and this, mind you, I created this strategy. Well, I didn't necessarily say I created it, but I've been using this strategy on Forex. Now I'm switching over to futures, using the exact same methods. Liquidity sweeps, price coming up, taking out highs, or going down to take out lows. And I'm looking for reversal confluences. Or in some rare scenario, I'll look for continuation. But I don't really look for continuations. I'm more of a reversal trader. Feel me? Unchecked highs or unchecked lows. This low point before New York session came down to it that I marked out on a 5-minute time frame, and this is it on the 1 hour time frame. And nothing has came below that point for a couple of hours, really. So obviously that's an unchecked low. Nothing has came below it. I'm waiting for price to come below it. You know what I'm saying? Let me tap into that junk real quick. As soon as it taps into it, I'm scaling down to the 5-minute time frame. Looking for my reversal confluences. Inverse fair value gap, breaker structures. Let's look at NASDAQ. I don't think there was the SMT. I think both pairs took out those lows. Yeah. and then both pairs are aligning together like there wasn't at SMT, that makes it even better. It's just a lot that goes. There's not even a lot. You just gotta, I don't know, bro. Because it's not hard. The hardest thing about trading is yourself. Having the guts to hold the position and trust yourself. And then knowing which highs and which lows are not going to be continuations. Because it's happened to me before, like it would have happened to me right here. Because we got my confluences, inverse fair value gap. We created a fair value gap. I would have entered. And would have been stopped out immediately. So it's not 100% win rate. But when you get stuff like this was a continuation trade. Obviously, we were reversing, changing the trend, going back to the upside. It was kind of risky to even sell at this point, but that's my strategy. So who would I be not to take my own strategy? But something like this, where we're coming off a liquidity sweep and then getting, you know what I'm saying, reactions and pullbacks into a zone. Come on, man. Then we respected it too. We didn't even close outside of it. So that would have been enough for me, man. Again, liquidity sweeps, it's just extra money in the market. Key levels. And the sweep comes from us coming down to those key levels, taking out the money, and reversing. We swept those highs and reversed. Fair value gaps, imbalances in price. Doesn't matter the size of it. It could be as big as this motherfucker right here, or as small as this joint right here. Doesn't matter. An imbalance is an imbalance. And price is either going to balance it out like it did here and continue on with the trend it was going off of after this liquidity sweep, or it could balance it out like it did here and just inverse it and continue on with the way that it was already going, regardless if we swept a session high. So you just got to be diligent and just look at all key factors. Like this right here, we had these pre-market 5-minute equal highs right here. The New York session opened, wicked above them, closed below it, and then a huge imbalance came. That could trigger sell positions. But on a higher time frame, we just came off of a higher time frame liquidity sweep. Remember, the higher the time frame, the more power it holds. So you will be on the 5-minute time frame looking for manipulations back into fair value gaps or some type of pullback reversal. If we got both of those, we came back into the fair value gap that came off of the liquidity sweep, and we also inversed the fair value gap that got us there, also creating one. And then you just scale down to the 1-minute time frame so you don't have to wait for this. Because if you would have entered way up here, you would have got a shitty ass risk to reward. Because you would have had to put your stop loss somewhere down here. Because this is a big imbalance. You feel me? There's a lot of room for price to retrace into. Like, for example, this right here, it retraced damn near to the bottom of it. Same thing here. And then finally shot back up. So you just got to be diligent and be mindful of all key factors when you're trading. But I hope that clears up a lot. And it, you know what I'm saying? You can now understand how all of that stuff works together. But that's all I got for y'all, man. Hopefully y'all enjoyed this video. And y'all stay tuned for the next one.